It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
And it's the Real Estate Breakfast, talking your property from Darwin to Canberra, Sydney to Perth and Melbourne to Mackay. Good morning if you are listening to us from Mackay. We have had the odd email come out of that region, and we are streaming on your favourite platforms like Spotify and Apple Podcasts. Woohoo, we are into another Friday, February the 6th today, and starting to wind up for another weekend. It's been a busy week. How has yours gone? Yes, the RBA kept things pretty interesting on Tuesday. And with that, got an email from you, Melanie. So good morning to you. Thank you for your email and taking the time to write in. You say that you're in a Brisbane apartment living scenario with your girlfriend. The RBA hasn't fully put the brakes on you buying in the next 6 months, but you're concerned about what is likely to happen between now and then. Your question is, what should you do? You're 27 years of age. You don't want to overextend. I think that is very, very wise, Melanie. And there is no mum and dad bank behind you, nor do you have a partner. You say that it is all you, your decision and yours alone. Well, far be it from me, to give you advice here. I think you've answered your own question. It is your decision and yours alone to make, and you've just got to weigh up the pros and the cons. The good thing is that you're already identifying all of those key things that you should be thinking about. Yes, it's probably not the last time that the RBA may put up the cash rate, and you don't want to overextend. Yes, we've talked about the 5% guarantee, which does make the mortgage rather large. Well, right now, let's go to Ben Burston, who is the Chief Economist for Knight Frank in Australia. Welcome, Ben, onto the Real Estate Breakfast this morning. I tell you what, Knight Frank seems to be taking over because I'm talking to another Knight Frank person tomorrow.
Well, we aim to cover many things, Craig. Great to be on the show. Thank you.
Melanie, this email, she is not alone. There'll be a lot of first-time buyers sort of getting a little bit of the wobbles, but not being completely shaken at this point.
Look, I think in these situations it is challenging, as Melanie points out. I think it's important to try and think of the positives as well as the obvious negatives. And from Melanie's perspective, thinking of potentially buying, it's worth bearing in mind that the flip side of the pressure that it's putting on buyers is that hopefully it will slow down some of the price growth we've been seeing. And hopefully Melanie can probably benefit from a slightly softer patch in terms of growth and sort of set herself for when she wants to get in the market.
Because you are from Knight Frank and you are the head chief economist there, I have to ask the question, don't I? RBA, the outlook for the property market for this year, where's your take?
Well, I think they've given us a signal in as much as they do. They're wary of giving signals, but a sort of coded message, I think, is that we should, unfortunately, probably expect another rise in May. I think that some of the language that was being used by the governor and in the statement, it suggested that they very much got a watching brief on this, and their forecasts for inflation show that they expect it to get a little worse, I'm sad to say, a little higher before it gets better. And that, of course, while they're never going to commit to what they're going to do, I think we can take from that it's more likely than not that we probably will get another rate rise in May. And so, at that point, I think they'll feel that they've taken significant action in doing two rather than one. And I think it's likely that they'll maintain a watching brief from that point, and they wouldn't want to do any more. I think that we could be on hold for quite a while after that before hopefully the pressures abate and we could hopefully unwind that with cuts next year. But I think, sadly, it's probably too much to hope for an unwinding this year.
You know what I found really interesting with that press conference that Michelle Bullock fronted was the amount of times that she said, the board's thinking, the board this, the board that. I've not heard her say the board as many times as what she said on Tuesday.
Perhaps that was a subconscious reaction to, yes, she wants it to be a team endeavour, not her decision alone, of course. And so I think it does, partly that language, look, it reflects the recognition that this is going to challenge a lot of people out there. It's a challenging message for her to deliver. It's her job, of course, but she wants to maintain a united front and present that is not just her view, it's the view of a number of people there on that board. And of course, the arrangements have changed. And so now we do have that voting arrangement, and it was pointed out that it was a unanimous vote. So, and that's partly why, as I alluded to, I think there seems to be obviously a unanimous vote, a unanimity of view, and that's one of the reasons why I think we probably should brace ourselves for another one in May.
Now, we should talk about the supply, drill down on that, if you will, from your standpoint and how you think that might unwind this year.
Well, look, what we've been hoping for some time that we would see a pickup in residential supply. I think it's been well documented, some of the challenges that developers have faced, and that has tightened the market up because, of course, we've had quite a bit of, strong population growth coming off the back of the pandemic. And so we've had this mismatch, and whereby developers, even though we've seen some price increases, it's still, they have generally found it challenging to meet the higher cost of construction, higher cost of labour, and of course higher interest rates. And we were just starting to see a picking up in development approvals, and certainly we were hoping, perhaps 6 months ago, we were hoping that we might be having a very different conversation about interest rates, and one more related to cuts that were going to make it a bit easier. But unfortunately, I think this prolongs some of those challenges on the supply front. It'll make it harder for us to see a strong ramping up in apartment supply. Unfortunately, it is going to be a bit of a slow grind, as I think we've become used to, I think, by now.
Well, I'd love your insights when it comes to the commercial property sector, because there will be people that will be thinking, gee, is now the time to look at commercial? Commercial property, though, has been coming back, hasn't it?
It has started to come back, yes. So we see there, and often we get asked, so what's the outlook for the property market? It depends on which market, because it depends not only on location, but it also depends on sector. And within the commercial market, we've generally been through a difficult patch. So the increase in interest rates that we saw, the steep, of course, we've had this another rate rise, but really what impacted the markets was the big increase in rates that we saw from mid-2022 into the end of 2023, the really steep rise in the cash rate that pushed up borrowing costs across the board. And so for commercial markets, more so than residential markets, we saw them feel the impact of that. And we saw office values, for instance, drop by 20 to 25% on average. And, all cities really, we were seeing a decline in values. We had seen a decline in values in the retail sector as well, which started a bit earlier during the pandemic, and even the industrial sector, which had been really strong, was impacted by higher interest rates. But we're just starting to come out of that. Of course, this recent news this week is not helpful, and it will probably slow down the recovery a bit. But having come off such a difficult patch, a lot of investors interested in commercial property are thinking that it might be a good time to get back into the market.
Yeah, so in terms of the different asset classes, industrial, office, etc., where do you think it's likely to sort of get a bit of a bounce? I'm just trying to get something out of you for those listening thinking, gee, which asset class should I get into? And in just a moment, I'm going to ask you about alternative asset classes. A lot of people will say, what is that? But the traditional asset classes, where's your money at?
Sure. Well, just firstly, as an observation, the higher interest rates is not helpful for any property market, but it has put the focus on, for private investors, it's made a lot of them look at the commercial market. And the reason that they've done that is because of the higher yields on offer. So we're all generally aware of the relatively lower yields for investors in residential markets. And of course, they would hope that, capital growth would drive return to a larger extent. In commercial markets, they tend to be proportionately higher income returns, a stronger yield, and in a higher interest rate environment, that has put the focus on those sectors. And of course, as I mentioned, the fact that we've seen some declines in prices is making them look at those sectors. So to answer your question, though, look, over the past year, we've seen the retail sector come back quite strongly, and that's been really interesting because it has lagged the other asset classes, probably not just over the past couple of years, but really over the past 10 years. It's been behind the curve. A lot of investors have been wary of retail. They've been wary of the impact that online shopping was, of course, having in sort of taking market share and the threat that presented for retail assets. But, it's turned out, even though, of course, yes, that is happening, we do see a gradually rising share of online shopping, but it's not enough to take the shine off the sector. It's been in the doldrums for some time, but we've seen things turn. And partly because it hasn't been a popular sector, we've seen less investment in it, less new supply. And as we've seen the economy recover, and indeed the reason the RBA was inclined to increase interest rates was because of those inflation pressures, which is partly because of the big comeback in consumer spending. And so, of course, that's benefiting retail. So there's one for you in terms of it does represent a bit of a turnaround, but that's been the strongest performing sector over the past year.
Retail. I get the feeling that's where it's at. Alternative asset classes, as I mentioned. What is an alternative asset class? Well, one of them is a data centre, and they seem to be popping up, don't they?
They do seem to be popping up. It's a really interesting sector. We get asked about it a lot. It's a real growth area, not just for the real estate market, but really for the wider economy. We see a lot of investment in data centres, particularly in Sydney, but also increasingly in Melbourne and in Perth. Australia is a really important hub for the region. We are regarded by some of the big American technology companies as a terrific location from which to operate, and that's made it a real growth area. However, it is one that's a bit harder to invest into. So whereas private investors can find, appropriately sized investments in the retail sector or industrial sheds or indeed small office strata offices, data centres tend to be much bigger, so not as readily investable, but a fascinating sector and definitely one to watch.
All right, Ben. Well, good to catch up for the first time in 2026. You're the chief economist there at Knight Frank, and we're going to be tomorrow morning talking to Faisal Durrani, and he's going to give us the first taste of the market in Dubai. So many of the Aussies are still heading over to Dubai. Have you been to Dubai before?
Only briefly. It was interesting. The Desert Classic, the golf tournament, was on, and I once in 2018 on a trip between Sydney and London, I stopped over briefly. Fascinating place.
All right. Well, thanks again for coming on to the Real Estate Breakfast. Look forward to chatting again some other time.
Thank you, Craig. Likewise.
Every morning from 6 a.m, we bring you the latest real estate news with diverse perspectives from leading industry experts. We deliver the most property podcasts across Australia every week.
Provided we stay on track with our inflation, which that's what we're looking to do, then there is opportunity for interest rates to come down. The question of housing prices, of course, is nothing we can't do anything about, and that's a whole story for governments in particular.
Yeah, so trying to tame inflation is the role of the RBA versus the cost of the housing going up. That isn't the role of the RBA, but one conflates into the other, which is where you get that damned if you do or damned if you don't comment, Leanne, coming through from the governor. Probably some frustration.
Well, and it's true, right? Typically, when interest rates go down, prices do go up. That is the reality of it. And she's absolutely right. It's not their role. And we have talked about lack of supply for years now. And the government's own Housing Supply Committee are saying that we're something like 262,000 properties behind for this year.
We connect you to the best real estate information across Australia. The Real Estate Podcast.